Namaskar. COVID-19 has changed our life and work in a number of ways. We were just chatting before we got live that Saturday afternoon, there are about 200 plus people locked on. Life has changed. And this used to be my siesta time on most Saturdays, but that time was very, very different. I have always believed that if we pull in our thoughts, we can come up with intelligent solutions for every conceivable problem. At CEO Lounge Digital Series, we're addressing a variety of business issues across industries on how to overcome this crisis, address real challenges, and potential solutions. This is our third conversation with an august panel of business decision makers and an opportunity for the audience to reimagine how business is done and get some more insight while transformation plan is underway and gear up for the future. Our discussion topic today is extremely relevant for each one of us, navigating the murky waters of COVID-19, reducing costs, cash flow issues, technology as way forward, hard decisions, layoff strategies, new revenue streams, etc., etc. And we are joined today by Dilipkumar Khandelwal, Managing Director and Global Head of Technology, Deutsche Bank, Gautam Dutta, CEO, PVR Cinemas, Vibha Padalkar, Managing Director and CEO, HDFC Life, and R. Mukundan, Managing Director and CEO, Tata Chemicals. Extremely elite panel. They're hands-on and have a diverse experience. And to moderate the panel today, we have a seasoned banker, debt and equity restructuring expert, and an advisor to multiple family offices, Deepak Varghese. Deepak, we are all set for an engaging conversation. Over to you.
Hello, thank you very much. Welcome to everybody for the next edition. The key is that this is the new normal, and we've heard that in the previous panel, that there is nothing called as lockdown lifting. A week down into the lockdown, leaders are up and running, teams are up and running, trying to figure out how it is that you're going to run through the lockdown. Now a week down, past the lockdown, teams are still running, and I would like to invite Vibha to open up the conversation. Vibha has her expertise across sectors from HDFC Standard Life and investing. She's had challenges and the team's risen up to the occasion. Over to you, Vibha.
Thank you so much. Thank you, Deepak, and also thank you, Deepak Yadav, and everyone, Hari. Yes, I think what better way to spend a Saturday afternoon, huh? And I think we almost become video conference junkies now. That's the new high, I think. So the way I see this and what we've been going through, and I think I also change my opinion perhaps every week. So a week down the line, I might have a different view. But at present, and with some level of introspection, I feel that when investors ask me that, what will your margins be in Q3? And I really tell them, I don't know. If this pans out, then I will be top of the charts on this. But I really don't know when. It's not that I don't know if, but I don't know when. We will bounce back. And what does bounce back mean? What I do know that this is going to stay. And also I know that there are opportunities without all the obvious pain that all of us worldwide are going through. There are also opportunities. And this will separate out the tougher nuts versus the ones who have been there because of a rising tide. And really, it's our job to ensure that we are one of the tougher nuts and we come out even stronger out of this, and keep a watch and keep prepared for opportunities. A second point is that very quickly, I think all of us, all my colleagues on this panel, as well as wider corporate India, has done, I think, a pretty decent job in BCP. And I don't think any one of us could have been prepared for this kind of a mother of all lifetime events that we're going through, or even 3 or 4 lifetimes, because people are talking about the plague and what happened in 1918 and so on. So clearly once in more than a century. And so none of us could have been prepared for this. But I think we have done a decent job of a few things: empowering our teams that we would have created, ensuring they are agile, ensuring that they act with empathy. So that, I think, to some extent is working well. And when I have talked anecdotally to my some of the captains of industry, that's the feeling I get, and not very different in the case of HDFC Life too. So I don't want to talk too much about it because it's reasonably decent. I think Indians are resilient. We do survive. Yes, the famous jugaad is there, and we adapt. We are known for that. And so that BCP part is, I think, 31st of March, FY20 numbers, all of that is done, dusted, and we moved on. So one of our most important stakeholders, which are employees, is something that I think we have reasonable amount of clarity on how do we want to not deal with the situation, but how do we want to separate out a recessionary trend versus a little bit more empathy, because this is way beyond just recession. This is significant panic amongst people, not just about falling ill, not just because they have senior citizens at home or they have a comorbidity situation or they haven't saved enough, but also because they don't know whether job losses are going to happen. How severe is the, especially SME, MSME kind of a sector, unorganized sector and organized too. What's going to happen down the line, even when so-called corona recedes? Even then, does the pain recede? What happens to the markets, for example, and so on? So that pain is real. And so what we have done at HDFC Life is to be transparent and act very swiftly. We were the first ones, I think, at least in the financial services arena, to give a bonus, to give an advance, before I come to bonus, give an advance against salary middle of March itself, so that people can stock up, people can not at least worry about this aspect. That went down very well. We also mentioned that senior management will handle things very differently and will bear higher pain than the masses. So pay cuts in bonus will be borne by the senior management, while the masses will, at least for FY20, because we had a good year, we will not shortchange them. So that was again very clearly communicated. No increments, however. And why no increments? Because we are not paying even dividends to our shareholders. Some of it was regulator urging us to be cautious, and so all of us have to bear the pain. Again, clear communication that there are not going to be any mass layoffs, at least into the foreseeable future. So that too was behind us. And so there is this collective sense of purpose and a family where people then realize that, yes, I have to now do my bit too. So yesterday I had my virtual town hall with 20,000 people, and a lot of people did message to say, I understand where all of you are coming from. So that's the most important stakeholder, I think, which are our employees. Moving on to our customers. Again, immediately, the servicing needs of the customers was most prominent: paying of death claims, paying of maturity claims through digital. People could not get, for example, death certificates for obvious reasons. So we just said, okay, all you need is a discharge notice from a hospital, a registered hospital, and we will pay the claim. We'll pay 75% of the claims, and so on. So how do you reach out to customers? How do you answer all their queries? Despite your call centers going down, despite work from home, despite enabling our people through Citrix, there were still gaps in the first 15 days until we caught up, and today it's as if there was no hiccup. Reaching out to customers became extremely important through all of the digital touch points before we started focusing on new business. Now coming to new business, and we have been priding ourselves as being a digital insurer. So this was the time to really do only digital and not any face-to-face. So we trained our guns on that after 31st of March, after stabilizing the two stakeholders that I talked about, and putting to test where in end-to-end we are able to sell. And like I said, Indians are resilient. Now, exactly the same has happened during demon. Might not have really moved the needle on weeding out black money, but certainly all of us, and even people in non-metros are spending more and more on digital payments. So that clearly, that's the inflection point. That's the inflection point that's happening now. Wherein after the hunkering down for about a month, wherein people said, "Abhi chodo, once we are able to meet, we'll figure out." Now we are finding that people are at least agreeing to calls or Zoom calls. So that is a fairly good positive change. So we are building on that, wherein end to end. We had been working on a platform called Wise, and that just means that there could be a three-way sharing between a bank assurance relationship manager, a person from HDFC Life, and the prospect. And you can play a small video, you can do his telemedicals, you can do screen sharing and help him fill the form, everything that you can do as if he's sitting next to you. An online channel has continued to grow, which is again intuitive, and that's what we see. So we really need to help shift. And the downtime in April, we utilized in training our people on digital, training our people on selling through digital, communication skills. We have started a counseling helpline free of charge, wherein our employees in complete anonymity can seek advice on mental health, physical health, wherein all employees log in at the same time, and there is somebody who you can follow and does various things, Zumba one day, aerobics another day, and so on. So there's a community feeling. There are different teams that are pitted against each other, and there's competition and so on, so that families can come into that play. And so looking after that aspect. So new business, I think I'm reasonably, I won't say gung-ho, but I'm a big believer that the average Indian will start getting somewhat more comfortable to buy insurance. So that is as far as the customers are concerned. And in terms of shareholders, important, we have 5 lakh retail shareholders, for example, and of course all the corporate shareholders. But the retail shareholders, to reach out to them through our analyst call to say, this is the reason why right now we are not paying dividend. And we are also sharing in the pain. There will be no new hires, no increments, and so on. And there's been very little pushback on that front. So that is a third big time stakeholder. And the fourth is all our partners and vendors. So we reached out to them and we split all of them amongst the executive management team to say, you will do these and you will reach out to these, so that to empathize. It's easy to say in our call center that, from tomorrow it's a variable cost. I see business down by 43%. Sorry, but I can't pay you guys. Yes, they will sack them, but what if the green shoots around the corner? So doing this in a manner wherein it's a partnership rather than in a very tactical manner. And we do believe that these kind of dealing with empathy will mean that these relationships will be built to last. So I think that's where I would like to stop now. But it has been a journey wherein collectively we feel we are doing the right thing, and we don't feel like a deer caught in headlights.
Thank you, Vibha. I see a lot of people have logged in now. So I'm just going to quickly summarize for the people who've joined in. And, as a service organization, as a people organization, I mean, what I heard from Vibha very clearly was empathy, empathy, empathy. Right across stakeholders, staff being family, look after your flock seems to be an absolute key thing that Vibha has done for her organization. Reaching out to customers digitally while physically was not possible. And the shareholders as well as partners. I think that is a huge learning from, from what you all have done. Very quickly also for the viewers who've joined in, this format is we have the speakers going in their sequence. And the last 15 minutes, so the first 30 minutes is where the speakers take the forum on. And for the last 15, 20 minutes, we will take questions in the Q&A section. The next speaker that I would like to invite is Mukundan, MD and CEO of Tata Chemicals, to share his experiences from the manufacturing perspective and the people challenges and how they have taken this on to the new normal. Over to you, Mukundan. You'll have to unmute.
Okay. Thank you, Deepak. If the connection is not stable, I think just let me know. I'll switch off my video so that the bandwidth I can gain and still be audible to everyone. So firstly, thank you, and thanks for all the people who have joined in. I just want to say this has been a big lesson of how do you learn on the fly. Really, we had no playbook for this kind of an event. And this was not the BCP we were looking at. Let me be very clear. It was not in our risk matrix. The first sign of it, what we got was there was an auto show in Delhi in February. Our team was supposed to go because we are trying to get into the battery business, electric car. And suddenly we heard there's a huge Chinese delegation coming there, and we had seen this China shutdown. And my first instinct was to tell my team, you're not traveling to Delhi. I don't want any one of you going there inadvertently getting infected. So my team actually thought I was a bit crazy and a bit paranoid. But I think the government moved much faster than us. They actually stopped the Chinese from coming, and they said they'll be put in quarantine if they came to India. And that was the start of the stop of flights to India. So broadly, I think it started in Feb. We never anticipated it will evolve into the kind of situation we are in, 45 days of lockdown or more than that. And a lot of people talk about U, W, V, L and all that shape. And I clearly can see within my business, because we serve multiple industries and chemical companies generally serve multiple industries, there are sectors which are like V, the sectors which are like U, the sectors which are like W, and sectors which are like a cliff. They're not going to come back. So I always tell them this analyst way of looking at is the economy. I think that it'd be very, very sectoral, very, very granular. I think that is one learning we have already. So we never really stopped, as I said. The products we were supplying to pharmaceutical and food industry have been running. In fact, the sales to food sector have actually shot up 20% more. So we've been struggling to keep the plant satisfy the customer needs. And from day one, we were putting this entire exercise on about 4 pillars. And let me just say what the 4 pillars were. The first one, as Vibha also mentioned, was completely employee and community well-being. Our first concern was how do we keep our employees and communities safe? Whatever we do, we can't bring them in the harm's way. The second, obviously, was liquidity. For us, liquidity was very important. We are a zero-debt company in India. We are sitting on cash, but even then, we drew down whatever credit lines we had internationally. And it was very critical because we had no idea how long this is going to last. Some people said 6, some people 12, but then the management and the board took a call that this will go only when the vaccine is found, and that's 18 to 24 months. We actually played out the extreme scenario. The third element is very, very important because that's the one which told us the resilience in the organization, the pivot to digital. I never really thought that digital would become the centerpiece of what we work. In fact, the latest plant restart we've had in Cuddalore in South, we had to do that without the plant manager being able to travel there because he was in containment zone. We couldn't have the shift engineers go because they had to come across the districts, but yet they restarted the plant with instructions going telephonically over a video on a Skype. So these are new things we are, tele instructions for the shift in charge. We never thought of that before, but I think that's something which we are. So the pivot to digital, I would say, is the third pillar. And lastly, I think we are not really forgetting that there is an outcome which is beyond 24 months. So we are actually recrafting our entire strategy and saying this has taught us a lesson in terms of which segments are more resilient, which segments we need to grow, and which segments we need to give up. So. So I think, broadly speaking, if I were to come from employee well-being, I think from the day one, I think even before our plant never really stopped, as I said, we started looking at what are the various practices we need to put in place. We have a series of standard operating practices now well established, and this has been a thing which we have learned. And we have improvised on it. For example, social distancing at the entry point, social distancing throughout the plant. How do you run the plant with just 30% employees coming in, even at full load? These are things we are learning on the fly. How do you also isolate critical skills so that if one electrical shift in charge falls sick, we have 3 other people who can take his position, skill mapping, which we have never done before. These are things which we have done. Also creating facilities in and around our factories for self-quarantine, also facilities for them to look at the hospital. We have a 24/7 doctor on call. These things we did for employee well-being. We also have gone into extensive communication with employees in terms of removing their anxieties, making sure their issues are addressed from time to time. And very clearly, the other element of this whole thing was about how do we ensure, while we have staggered manpower, some of this manpower still feels engaged because you're now inviting only 30-40% people to come into the factory and work. How do you keep the rest of the 70-50% people engaged when they're not coming in, but they're needed the next cycle around to come into the factory? And all these practices have taken a lot of training, lot of communication, lot of change of mental models which employees have had in the past. One of the things I would certainly say to all the participants who are here is that create documentation, documentation, and documentation, because our fear of this entire operational process has been that if you by chance have one COVID-19 case, what stance will authorities take? Will they shut your factory down? And for that purpose, we've actually created a series of documentation, including employee self-declaration, declaration of temperature checks, declaration of what we've done, and physical proofs, which we now share across the board on a Google Drive. All the employees can access it, and it's available for giving it to the authorities in case they need this documentation going on. The other element of the process has been over a period of time, we now have created a small group of people called Corona Commandos. These are people who go around the plant, go around our operations, check whether people are actually following the norms which we have set for ourselves. Again, a very, very important step, because we realize that in some places, some of the people think this is, their immunity is so good that they don't follow this process and rules. So this has been, again, a process of sort of how do you to deliver on the commitment they make to all employees, even though few of them may not want to follow the rules and regulations. The other element is out of the vision. Factories have been run 24 by the time even the lockdown happened. Some of the factories were asked to shut down, like the Cuddalore one, which we actually were shut down. And when the shutdown orders came, they came very, very dramatically. During the evening, suddenly it was announced that the national day, they would sort of extend the lockdown into a one full 3-week period. And suddenly we had to seek approvals for our couple of engineers to go back to ensure the shutdown was safely carried out. And we ensured that the safe shutdown procedures were actually then reviewed by another set of team before signing off the plant had been shut down. And we also have now, we had at that point of time itself put in place a series of checklists which we needed to do for safe restart, including wherever were hazardous chemicals, what are we doing with them. I think this whole case of Visakhapatnam incident tells you that both shutdown and it's very detailed plan, and all along one designated person to do this. Now we know that if that designated person is in a containment zone, we need 3 designated people now, because I am with different, he or she can still go and check the whole element. One element of this changing demand pattern has been that now we've had to innovate on the fly to make the plant capacities and optimize the plant capacities. So as I was saying, our plant in Akola, which was supposed to make pesticides, was converted to hand sanitizers overnight. The speed with which the government actually gave us approvals has been fantastic. We got approval from Maharashtra government in 3 days to convert that to a hand sanitizer factory. Our unit in Metapur was converted to manufacturing disinfectant. In fact, today we are supplying disinfectants to government of Gujarat and government of Maharashtra free of cost. We're also supplying hand sanitizers to whomsoever wants in Maharashtra to the government authorities free of charge out of the facilities we have in Dahej and in Akola. Also, as I said, some of our users can demand to sort of re-optimize our plant on the run and re-engineer and shift the utilities to take up that load from the units which were not running at full load. Basically, the sectors they were serving were real estate and automotive sectors. Those sectors were down. So plant capacity optimization on the run is again another issue which we had to learn. There were a lot of external linkages. We realized very early in the game that very small chemical which we use, a container load in the entire year was coming from China, from a specific location very close to Wuhan. And that became a huge bottleneck. We needed to sort of work our way around. So it's not just international global supply chain, it is also local supply chains. For example, packaging units were in containment zones. Suddenly we had to ship material to our customers, but we had to get those factories started. So as a large unit, our approach has been to work with our suppliers to get them the approvals to support us so that we can continue to engage and ensure continuous supply to all our customers. We've had initially our experience with logistics, and the road movement was really bad in the sense that we hit all sorts of roadblocks. But I want to say that our experience with the Indian Railways has been fantastic. Because of no freight, no passenger traffic these days, what used to take 7-8 days on freight movement today takes only 2 days to reach destinations anywhere in India. So the reliance on railways, so we've in fact increased the rail load factor in the sense that now we're shipping a lot more through Indian Railways rather than by road. And the other learning has been to look at the stocking points very close to customers, because sometimes these logistic failures happen. You still need to service your customers. You need to make sure that you have multiple stocking points close to customers. So these were all the things we've done on the external linkages. In terms of financial issues, I think obviously we reworked our capex. The team has done a terrific job in terms of taking capital out of this out of the current year need. Also, we've had done a terrific job in terms of fixed costs down. A lot of costs we are looking at, fixed costs, we're looking at how do you variabilize them. I think that's another discussion which is on. We've actually looked at our customers and their credit appraisal again. We now know that many of our customers may be under stress. How do we support them during this period? We've identified them in 3-4 buckets, and we're trying to work with some of them and increase our share with some of them. So these are all the stuff which is going on. Also renegotiate with the vendors in case some vendors need higher support from us, then is there a discount which can come along with it by giving an advance because there are cash flow problems a vendor has had. And all on the whole, look at operational efficiency as a theme in terms of, in addition to working capital management. Broadly, in terms of last 4 or 5 weeks, what has been our learning? I think the first one is what Vibha already touched upon. We very quickly learned that what does empowerment really mean? I think we used to talk about this word, but really this showed that the front line was on its own. They still delivered without supervision. Many of them actually innovated on the fly. This also meant that we had to trust them more. The level of trust had to be of the highest order. Not that we didn't do before, but I think this opened up a complete new lens to look at the whole thing. The other element we've learned is that every business is unique. We've got businesses which are supplying to farmers. We have business which are supplying to food, which are supplying to auto sector, and every business is different, and there's no one-size-fits-all solution. So each one you need to do small experimentation and quickly scale up. Thing which we've done well is evening calls and afternoon calls. These are very critical for us. This used to be every day. Now it is every alternate day, Monday, Wednesday, and Friday. And there's a lot of cross-learning which happens on these calls. While people do share what they've done, but I think keeping those communication lines going, enabling people to the element which I already touched upon was digitize on the run. This has been a crash course in digitization. Which are the pieces which need to documents, even annual accounts closing, for example. Now we know which documents are not digital now, which we need to digitize going forward. Cash flow is critical. Cash is emperor now, not even king. And I always say this, while we go through this crisis may last 6 months in terms of the extreme crisis. It may actually taper down in terms of the extremeness of crisis, but will still be with us as a pain for a year and a half. But this is a time we should start planning for medium term and long term. Never waste a good crisis, because this is the time to jettison bad habits, old habits, bring in new business practices, bring in new business ideas, and also get rid of the ideas which may have run their course. So that's all I would like to say here. So all I can say is that no playbook, learn on the run. I'm looking forward to learning through this panel discussion what else I can do. And there is nobody to tell us what to do here. Thanks a lot.
Thanks, Mukundan. Really appreciate your insights, your honesty, and I'm sure everybody from the manufacturing sector, and I'm seeing some of the Q&As pop up, which I'm going to take towards the end, had a fair number of questions on the challenges that the sector was facing. I had this kind of momentary urge to kind of stop you, but the conversation was so interesting. I'm now going to change gears and move this over to Gautam from PVR. I'm sure a lot of people are interested in seeing what the service sector challenges are coming about. Over to you, Gautam.
Thank you so much. First of all, some great learnings, and Vibha and Mukundan both covered lots of the points that I wanted to talk about. But these are all words of wisdom, and I'm sure people who are listening would take note of these points. And I don't want to repeat them, but where I would sort of come in is how is our business different? And that sort of makes it very exciting and interesting because, every time a crisis hits, people say this is one industry which is going to go down. Piracy, we were supposed to be wiped out. DVD came, people said people will stop watching movies. Then came IPL, and people said, oh God, cricket is going to completely take over, and who's going to be watching the movies? But somehow we survive. We survive because people don't understand the one simple thing, that entertainment is actually an essential commodity. It's not a non-essential commodity. A lot of people say you won't die if you don't watch a film, which is a fact, but you will actually die of boredom if you don't watch a film or don't do anything. The second question nowadays, every day that I'm getting to know is, people are watching a lot of Netflix and Amazon and OTT. And so how are you going to sort of turn it around? And reality is we are not running. We are not running the race, because the fact of the matter is, let us open and we'll show what will happen. Because the fact is, I can just tell you on the last day when we closed and when, there were already some bit of talk around the virus spreading, we got 210,000 people. And this was with 50% of our cinemas which were sort of locked down, and 50% were only operational. And yet we got 2 lakh people who said, damn it, and I'm going to come out and watch a film because that's what life is all about. So eventually, yes, the fear became bigger, and we were the first to sort of close down, and we would perhaps be the last ones to possibly open. We are aware of that. But I think what we are doing is a couple of things. We're taking it right on our chin. And we've always believed that this industry has come up with something new, more innovative, more sharper when the chips are down. And currently, the fact is, we believe it's slightly unfair to compare this whole OTT to cinema debate, simply because we are not on. The day we are on, I think you would see a huge amount of change. Having said that, going by what Vibha and Mukundan had sort of covered, I'll quickly talk about some of the key things that we did, and along the way, some of the key learnings. One, as I said, we continue to be optimistic, very, very optimistic about our industry, about our consumer. We are kind of talking and communicating with our consumer virtually once a week. We have a huge loyalty program of roughly about 1 crore and 10 lakh people. So we know exactly what that guy is doing. We are actually sending him recommendations for movies that he needs to be watching at home. And because we truly believe we are not in the business of showing movies. We are in the business of out-of-home entertainment, and we've completely redefined this space by how are all aspect of service come in. So today, when you ask a consumer, he's not come to PVR to watch a film. It's about his 3-hour holiday. He says, I wanted to, today's a happy Father's Day, and I needed to be a good father, so I've got my family out. Today is happy Mother's Day, so I've got my mother to come and have a treat. So it's no longer about just the film. It's about great food. It's about great ambience. And somebody rightly asked us many years ago to say, why do you sort of end up spending so much money in your foyers? They look like 7-star hotels. And one of the reasons is because this is a doors to fantasy. When consumers walk in, they need to be transported to a different world. And I think PVR started that trend. We way back in 2004, PVR launched Gold Class Cinemas, which was all about recliner seats and fancy food. Could you have ever imagined a cinema chain selling sushi? We do that today. And we've got a chef from Hong Kong, Saito, who's one among the best in the world, who's sort of set up a sushi brand for us. I was talking to the reporter the other day. She said, the last visit I went to the cinema and I said, can I get pasta? And I was so excited to see pasta in your F&B listing. So I ordered for a pasta, and the guy turned around and said, with red sauce or white sauce? He said, wow, what's happening? Where am I? So technically, the reality is that this is where I think PVR and this entire industry has kind of graduated to. Some talk about it, some unknowingly has chartered into this territory, but we are really in out-of-home entertainment. And we believe that these are times when we need to again look back into every part of our value chain and see how we can sort of redefine it. So we're looking at new F&B. We're looking at now getting rid of box offices completely, going all digital and 100% online. We are looking at more recliner seats, simply because the social distancing technically get met by recliners a lot better because they're wide and the other person is far away from you. So, and even in places like Muradabad, Vellore, the last row recliners sell much before the normal seats. So everyone, one of our consumers summed it up really well when he said, this is my 3-hour vacation. And we called it the moviecation. So we said we are in the business of memories and moviecation. And so that's what we thoroughly believe. As we have a very, very strong and a large team with us. We have roughly about 14,000 people. Like Vibha said, we've insulated the minimum wage staff for the last 2 months, March and April. We paid them full salaries. All the brunt has largely been taken by the management team, and rightly so, I guess. But we are hoping that there would be some sort of a support to our industry by the government. And if that comes through, I think we'll be able to wade through this difficult time. But as I said, we're doing a lot of great work with our film industry. If you notice, not a single release has gone to an OTT over the last 2 months. And that we feel is another great triumph of our business, simply because out of the 15,000 crore that movie business that happened in India, still about 11 to 12,000 crores come out of the box office, the cinema halls. And that is something that we are very confident is not going to change. And consumers and our partners in the film business are determined to make that work. And wait and watch. When we open, we'll open with a bang. And all the basic things that everyone spoke about, social distancing and all of that, mask and doctor's checkup, and all of that will happen. We will graduate to a new form of being. I wait for a day when the government realizes that entertainment is surely an essential commodity, not a non-essential commodity. I leave it there and have Dilip take over from here now.
Thank you, Gautam. You've really got me itching to go and watch a movie now. You've really pumped, I think, all of us. And you're making us think of all the times that we went out for movies together.
And I can tell you, if I just talk about the lineup, which is there from Wonder Woman to Tenant to Suryavanshi to 83, it's just, and what you're going to be watching. And believe me, one big film, and this 110 million people who come to PVR every year, we get about 110 million people. Wait and watch what they're going to be doing, because and what happened to the liquor shops. We will have some good videos to send you after our cinemas open. Yeah.
Awesome. Now, before I just go to Dilip, I can see a lot of hands being raised. My request to the viewers is, could you just key in your queries in the Q&A? Very quickly, I'm going to pick up a query which seems to be kind of spooling. So that's going to be the opening for you, Dilip. I think for the MSMEs, I think the key thought that's running in their mind is, how is technology going to, or what are the possible anecdotes that you may have for them in technology that you see that can help them get past the current situation? Yeah. Over to you, Dilip.
So Deepak, thank you. And I think one thing was clear from the discussion with Gautam, Vibha, as well as Mukundan was, I think everybody realized the importance of tech. And in this time, I think they're able to connect with their employees, with the customers and the clients. It's just because of the backbone of the technology. And I think it's very interesting. I think everybody is talking for last 5, 6, 7 years about digitizations and digitally transforming and all those things, the big buzzword being used. I think what Corona was able to do in 15 days and put everyone into a digital track was not everyone on the slides and the consulting companies coming and pushing for it was not able to do it. So I think that's the reality. The second aspect, which is important just to get it, everybody understands, I think at least the traffic in India would have gone up by 10 times. And I think you just need to give a huge shout to all these telecom companies. I think we are able to operate, we are able to work out of home, we are able to do our jobs, I think without any fuss out of it, which is also a remarkable thing which has happened. And I think that's the robustness of the infrastructure which this country also has and the bandwidth which is provided. And I'll come back to Gautam on one particular topic, and I have a specific ask for him. I think he can really leverage technology in a big way. I think if you look at last 15 years, where I mean, when we used to work on a product companies, we used to be very happy when we used to release a product. You know, when I used to release a product, we used to be happy that the customer can buy it. And then over a period of time, what happens is that people were not interested in this what do you buy or what do you get as a product, and people were more interested in what solution you give them rather than the product. And then slowly over a period of time, you see the transition which happened from product to delivering solutions to the clients or the customer which you have. And what you're seeing now in the last 4 or 5 years, and I think it will even more strengthen with COVID and beyond COVID, is the people are not looking only for the solutions, but people are more looking for how do you get the outcome-based thing that they require, which basically means you're moving towards more and more outcome economy. And I'll give you a good anecdote because I think Gautam was good with his cinema and I'm a movie buff. So I would also like to go to movie, but I also would like to go into a situations where I go for a movie, but I really pay only to Gautam when I feel entertained, when I feel laughing, and I don't like to watch junk. So I think what you're going to go into a state would be, how do you get into a state which is an outcome-based economy, which is basically I pay for the outcome which is required. And I think that is going to happen much more even in the COVID times and beyond COVID times. I think one of the important aspects which needs to be tackled as a part of the crisis, and I think where technology can play a big role, would be the whole thing around this, the instant value, the customer experience, which you get it, like the instant outcome, what you get and all those things. So I think those are the two aspects which I feel is genuinely, apart from the security, which is going to become extremely key and important aspect as you go and start working on this topic. So I think just to for everyone on the call, just to keep reminding themselves that I think more and more business will go towards outcome based, more and more business will go towards the right kind of customer satisfactions and right kind of a level of security which they require for making it happen. Now, Deepak, to a question on the startups and the MSMEs and the small enterprise, what they look for in the startup times and all those things. I think I categorize this always into 3 parts. And I think I work a lot with the startup founders and as an investor in a lot of these companies. And I think I prioritize them always into 3 buckets. One is on the planning. And I think when I say planning, I think when the crisis come in, the planning becomes extremely important, because I think everybody talked about it, but I think it's very important that when you do the planning, you are saving every bit or every dollar or every rupee. You need to be very, very clear that what are we doing with every single money which we're spending. The second topic is prioritization, which is ruthless prioritization. I call it ruthless because I think there is no point in spending money where you feel that it is good to have and all those things. In the current time, I think you just need to be very careful on where you are spending. But if you feel there is a massive opportunity, then you should also invest there, because that's also an opportunity which creates it. I think, and the third topic is if you go into a mode and then you need to get it executed very, very fast in an agile way. I think I always tell in 3 buckets, which is just replan everything, whatever you have in the current state, because the state changes every day, and the things that are valid now are not going to be valid in 1 week time or so. Ruthless prioritizations. And the third thing is just getting the stuff done in executable, which helps the end consumer and get your brand stuff. And that is an important aspects on what I will recommend to the people. I think from a personal point of view, I mean, I just joined the banking sector 4 months or 5 months back. And I think I can tell you that I think in the last 4 months, I mean, there are things which has happened in the sector, and specifically also even at the bank in Deutsche, is we've been able to do 80,000 people who are working and operating out of home. We've been able to connect them. For the first time, we see all the traders and the salespeople selling out of home. And of course, in a compliant way, because it's a very regulated industry. So you need to be very compliant and you do it in a regulated way. We see a mass increase, I mean, 10-fold increase in your talking times and all those things. So I think the important thing that this technology has shown is that the technology has really enabled a lot of the things in the bank which was not possible in the past. And I firmly believe that I think this crisis will be very, very long. It will be very, very hard. But I know and historically have seen that every crisis like this have resulted in a better economy, better efficiency, and more stable world. And I think this will also result in a similar way. And I genuinely believe technology will play a massive role, not just in the tech firms, but also for all business which are driven by tech.
Thank you, Dilip. Now, very quickly moving on to the Q&A, because I can see the questions coming up hard and fast. And the first one I'm going to redirect to Vibha. More of a macro question, Vibha, for you. I mean, do you foresee any form of specific government stimulus which is kind of expected being spoken about for the MSMEs or sectors as large? And Mukundan, please feel free to add in if you have any thoughts on this. Over to you, Vibha.
Yeah, I think that is the expectation. There's already a moratorium on loan payments for people who borrowed from banks. There's also a moratorium from the insurance sector, when the policy holder now has 60 days more to pay his premiums on the policies that he's already bought. So some of that is already in play. However, the bigger pain is in terms of credit freeze, and the fact that banks will just stop lending and continue to do so, like we are beginning to see today. So banks are not going to be crucified if they don't lend and don't show growth, but they might be crucified if a lot more of NPAs start happening. Unfortunate, but that's what we see. So yes, I think I would expect to see a lot more of fiscal stimulus. However, what is the form or shape and how deep is the pain, I think will determine that, as well as how much of fiscal deficit the government itself can overall. What are they staring at? What are their revenue sources, and what does that look like, right from the dividend they get from LIC, as well as from RBI, and the one-time dividend that they got from RBI, and so on. How are they balancing their books? But worldwide, this is not only an India problem. We saw Fed doing that, and other parts of the world also loosening their purse strings in terms of providing that injection to the economy. I would expect personally to see that. Right now, it seems to be a little bit sporadic, and that's always very harmful, especially in terms of jobs. And a lot of corporates have been pulled up for putting people on the bench or retrenchment and so on. It'll be good to have some level of clarity. Companies also need to survive while they need to be empathetic, but it could be that if belt tightening is not done, and a lot of my colleagues on this panel spoke about it, then the very existence, especially of a smaller company, would be at threat. So answers are not easy, and a swift policy decision making just makes it a little bit clearer as to what is industry meant to follow.
Just to add Deepak, what Vibha said, I think we've been telling the government they need to move swiftly. I think MSME is in real pain today. MSME sector needs support. Vulnerable sections need support. And we've been saying that at least 2 to 3% of the GDP, they need to sort of push that towards, and they need to monetize the fiscal deficit through RBI. There is no other way out of this because, many businesses have had zero revenue and they're going to have zero revenue for next 3-4 months and they have to survive. This will then blow out into NPA crisis at the other end. I think we need to save the banking system also. So this is not one single issue. The magnitude is big. I think most of us in large companies are committed to keeping our employees, but we put a pay freeze on. We have not done pay cuts, we've done pay freeze. And in fact, the pain will be higher at senior level, just like Vibha explained. But it's an issue which we are pushing hard with government. I hope the policy comes. I think they understand, but they're working their way through this.
Mukundan, I'm just going to take you further on this line. In your piece, you had mentioned that there are some sectors which could be at far greater risk. What, in your view, are those sectors that should be far more careful going through this path?
Deepak, the sectors are well known to us. You see, if you take a sector like airline, if you take a sector like hospitality, these are really, really vulnerable today. I think
Sorry, Mukundan, specifically related to manufacturing, MSME and those.
See, if you really want to get into MSME and manufacturing, I think those which are connected to these sectors, or let's say sectors which will go through longer pain. Real estate is in real pain. You've got automotive sector, which is in real pain. So those MSMEs will have problem. More importantly, when you pick an MSME, those with weak balance sheets are going to end up in serious trouble. So I think we need to say a combination of sector, which is an external factor, versus a balance sheet, which is an internal factor. See, all of us look at P&L. We never look at balance sheet. Balance sheet is the fitness. Fitness is as important as how well you're running. I think fitness come to test in these sort of times. I mean, if your balance sheet is weak. So I would say within every sector now you'll find weak spots which will have to be separated out. Unfortunately, it will happen.
Well, thank you. I think that was very insightful, balance sheets. Gautam, quick one for you. And I think a lot of people are interested to hear whether you're going to get into the homes. How does the entertainment come home? OTT is the big conversation.
Yeah, but as I said, this is the big conversation, but I feel that we are currently, we believe that the out-of-home entertainment is not going anywhere. Yes, we are one of the industries which have zero revenue for over last 2 months, and that agony could sort of prolong for another month or so. But the fact of the matter is, what this time and opportunity is giving us is to completely redefine. There are certain parts of our service and experience is what we may be ready to vend out to consumers at their home, which is the F&B. So we're coming up with, say, a microwave popcorn options of saying the PVR popcorns could be ordered at home. And the F&B. There are a lot of other things that we are planning to do, for which unfortunately we need a little more time. We weren't sort of thinking on those directions. Thankfully, as I said, such times you are propelled into taking certain decisions and initiatives. We've already done that. This box office-less cinema is yet another experience. Thanks to this virus, we are saying we could eradicate box offices completely from our cinemas. So all in all, I think whether it's our people management, whether it's our hospitality standard, whether it's about our F&B, a lot of new thinking is happening. And I guess we shall emerge much smarter, if not stronger, to begin with. And I think we will learn along the way. There are things, you're absolutely right, and I don't want to give that feeling that things are going to be completely back on track exactly the way they were. But I think we may get a new answer, we may get a new learning, and this industry and category could completely change in the way we operate. So from that point of view, I think we still harp upon the fact that humans are designed in a manner to get out and socially interact. That is a very important need. And for that matter, we will continue to sort of redefine those spaces. And we are very confident that will bounce back very, very soon.
Thanks, Gautam. We seem to be running out of time. So one last question before I pass this back to Deepak Yadav. This question for Mukundan. The current topic is that of migration of labor going back, and a fair amount of concern before they kind of come back. What is your quick view on that one?
So I think, broadly speaking, this is one issue we probably, all of us need to reflect deeply about. I think we probably didn't handle it well. We probably did not think through the issues well, and they're all coming to roost now. Even if they come back, for example, the experience in China, some of our units which have been, when workers from other regions come back, even in China, the places they were staying as tenants, the owners were not willing to allow them to stay there again because they were not sure about the health condition. So companies now really have to go deep and treat the contract workmen as well as we treat permanent workmen or temporary workmen. I think we need to look where they live, what are their conditions. I think companies will have to take more responsibility. It will come at a minor cost, but it's something which we need to do. I think it's been a lesson. We need to we have probably caused a lot of panic in them, and it's going to create a lot of persuasion to get them back. See, the big issue, Deepak, is fear. I think we need to get the fear out of people. Vibha spoke about banks not lending. That is fear of lenders. Companies are not willing to borrow because there's a fear in borrower today. There's fear in consumer. There's a fear in labor. I think the fear has to go. Obviously, the fear will go once vaccine comes. But till that time, there's a lot which each one of us can do in our little ways to assuage that fear and get the machine working back again. So we have a tough job together to get India back to work. We see models emerging in China and other places. I think we need to work our way through this. As I said, there's no playbook for this.
Thanks, Mukundan. Deepak Yadav, over to you as a moderator. I know I've overshot, but I think that's a very interesting conversation that we've had.
I think it was a great conversation. Empathetic leadership, agile strategies, and managing through clutter seem to be emerging as the most relevant leadership attributes. Deepak, you did a fantastic job moderating the session. And thank you to Vibha, Mukundan, Gautam, and Dilip for an insightful conversation that is effectively calibrated between empathy, productivity, and corporate needs. And also all our 300 plus attendees for their participation. Do write back to us with your feedback and submissions. And before a goodbye, let me invite you all to the next Saturday, 16th May at 2 p.m. for another engaging conversation with business leaders on future-proofing the organization. Thank you. Goodbye. Stay healthy. Stay safe. Namaskar.